What's up, everybody? It's Brandon Locaron here, and today we are talking interest rate, right? Is it coming down? That's what everybody wants to know, and that's what everyone is Googling right now. So I kind of wanted to do a little video and kind of talk about where we are right now after Jerome Powell's speech this week and where I think things are going to go next year, right? Because yes, the general consensus, the short form of this video is interest rates are going to drop. But I'm going to talk through the tactics on how I see it dropping, when I see it dropping, and kind of the impact of those interest rates drop on the real estate market in particular. So, as you guys know, Fed Chair Jerome Powell spoke on Wednesday, and he is saying that they're expected to drop rates by 3 times, right? So when people say drop rates 3 times, they don't understand how much, right? And we still don't know how much he's going to drop it. But assuming the worst case scenario, he drops it by 25 basis points each time, then that would mean rates will be 0.75% lower. Now, after his speech, which generally anytime he speaks, the market always react, right? What happened on Wednesday, though, interest rates started dropping, right? Interest rates were down to 6.5%, 6.25% for a mortgage, a conventional loan, and what happens is the investors in those markets kind of see things getting better, and they are going to drop rates ahead of time because they want more business, right? You have to understand that all this time, because of the slowing housing market, they've also been kind of had to tighten their belt, right? Because they are holding back. They aren't doing as many loans, just as there's not many homes selling right now. So they are kind of going to jump the punch and say, yeah, we'll lower rates because we understand that Jerome Powell and the Feds are going to drop rates by 75 basis points next year. So they're willing to kind of take that hit, if you will, for the next year and say yep, let's jump the gun and go to this, right? So right now where we are is interest rates, they were about 7%, and now they've dropped about, to 6.5% roughly is where we're seeing the median is, okay? So it is still a good time to buy if you are thinking rates are dropping. Instead of doing a 2-1 buy down, you could do a 1-0 buy down, which, makes it a little bit cheaper for the seller. So now Feds, let's talk about when they're going to drop rates, right? So they're going to drop rates, I believe, in the spring. That's when they're going to start dropping rates, because right now, while they do have a control on inflation is still staying steady, right? It's not dropping. And the Feds ultimately want that inflation to go down. So we have to see, inflation starting to take a turn down before we start seeing them drop rates. So I think it's going to be about springtime before we see, inflation. A lot of it's going to be dependent on, what the CPI shows, what the employment report, jobs report show. Those are all things that factor into their decisions to drop rates and when to drop rates. Now, there is sort of this holdback. There's a split in the votes, internally in the Feds, because, some of them think we should raise rates, right? And there is that possibility. And, obviously, someone like Jerome Powell has got to cover his bases, right? Because he is under a lot of scrutiny. So he wants to make sure that he covers his bases. So he, obviously hinted at, hey, we could see rates going up here before they start going down, which is a possibility. However, I think with inflation being steady, I think we are going to hold. We're going to see this holding pattern until the spring of next year, when we start seeing rates possibly start dropping, right? So with that, though, let's say right now at the end of next year, we're probably going to be, right now we're about 6.5%. We might see things in, the fives, 5.75, 5.5 kind of range, depending on where the markets are at. So, I do think that impact, though, when interest rates drop, people are going to start looking to buy again. And that's going to cause another spike in the market. Home prices are going to continue to go up next year as normal, but it might be more than the usual, 5-6%. It's going to be more than more like 8-9% is my projection, at least in strong markets, strong growth markets, not necessarily high cash flow markets. So that's some of the things to keep in mind as you go into next year. So it could be an opportunity now, where you could get a good deal now, negotiate that seller down, and then refinance next year. So the next thing is that like the inflation and the economy is looking like they are actually going into the soft landing. And I'm not gonna lie, I was skeptical at first, like when we started talking about a soft landing here, like I didn't see it possible, especially with the war in Ukraine, the war in Israel. These things like tend to kind of shake up our economy, right? So I didn't see that soft landing happening, but I think as I see them controlling inflation more and more, I do believe like we're going to go into a soft landing here. The only thing I believe that would drop rates even further is if we do get into a war, they may want to kind of like create some spending here to get some money moving in and out of the market. So they could drop rates and they could use interest rates, right? Remember, interest rates before the pandemic was typically used to kind of stimulate the economy. But when your baseline is zero, you cannot like do zero, right? And there's actually a funny fact is that there's one country that has a negative interest rate, and that's Switzerland. So Switzerland has a negative interest rate. The banks pay you to do a loan, right? So which is pretty cool. Anyways, so I do think that soft landing is looking like it is going to be a possibility as long as things stay where they're at. Spending doesn't go off the charts for Christmas and New Year's kind of thing. And I'm noticing like, just driving around, there's people spending less and less money. Going to stores, there's less people there. There's, and so things are better. Now, the other thing too is that with the stock market, what ends up happening is, because the dollar drops, right, the value of the dollar drops, stock prices tend to go up. So I do think the stock market's pretty strong right now, but I do think the dollar is going to gain back value and everything. So, to kind of summarize this, like I do think interest rates are going to drop next year. They are going to drop. Rates are probably going to be in the fives, high fives, low sixes next year. It is a good time to buy a house and then refinance. You can get some deals out there right now because what's going to happen is there's going to be a lot more buyers come back into the market when interest rates drop. So look for that boom, look for that spike in home prices. It's probably going to be like 7, 8, 9%, gains year over year. And I think like, we'll see. But I believe that, things are looking good right now and we just got to get a better control on inflation and start seeing those numbers turn down. I hope this video was helpful. If it was, please hit the subscribe button below, like, follow, comment, and I'll see you guys on the next one. Take care.